Welcome back to Market Brief After Hours. It is great to have you with us as we break down what turned out to be a historic Tuesday on Wall Street. If you thought the start of the year was going to be a quiet easing into 2026, the markets clearly had other plans. We are talking fresh record levels, a massive surge in commodities, and a global rally that seems to be shrugging off just about every geopolitical headline thrown its way.
It really was a statement session. You look at the price action and it's pure risk appetite. The market is effectively telling us that despite the noise, specifically the developments we're seeing with Venezuela, investors are laser-focused on growth themes and the economic outlook for 2026. It is a buy everything mood. Well, almost everything.
Let's get right into the numbers because they are eye-watering. We saw milestones falling left and right.
Absolutely. The headline grabber is the Dow Jones Industrial Average. For the first time in history, the Dow closed above the 49,000 mark. It surged 485 points, or roughly 1%, to finish at 49,462. That is a psychological barrier smashed. And it wasn't just one sector. We saw broad participation from industrials, financials, and energy.
And the S&P 500 didn't want to be left out of the party either.
Not at all. The S&P 500 notched a fresh record close as well, advancing 0.62% to finish at 6,945. It actually hit an intraday record earlier in the session too. The engine room there remains the mega-cap technology and semiconductor names. They are just underpinning this entire benchmark.
Speaking of tech, the Nasdaq composite had a solid day too.
It did. The Nasdaq climbed 0.65% to close at 23,547. This is the AI trade continuing to flex its muscles. We saw Amazon up more than 3% and Palantir added over 3%. But the real star in that space was Micron Technology. It surged around 10% in a single session. Micron is actually up more than 20% year-to-date already, coming off a standout 2025.
That is incredible momentum for so early in the year. Now, you mentioned earlier that the market is ignoring the Venezuela situation. Usually, geopolitical instability rattles nerves. Why the shrug this time?
It comes down to supply expectations. While there is uncertainty surrounding Venezuelan crude output, the market seems convinced that global supply in 2026 is ample. We actually saw oil prices slide. Brent crude settled at $60.50 a barrel, and West Texas Intermediate closed at $56.92. The lack of a sharp spike in energy prices essentially gave the equity markets a green light to ignore the headlines and focus on corporate earnings and growth.
So bad news for oil bulls, but great news for equity sentiment. Let's hop across the Atlantic. It wasn't just a U.S. story today. Europe seemed to be in a good mood as well.
Europe was firmly higher. The Pan-European Stoxx 600 ended up 0.6%, and we saw several bourses hitting record territory there as well. The FTSE 100 in the UK jumped 1.18% to close at 10,123. Spain's IBEX 35 was a standout, hitting a record 17,647, up 0.19%.
And the major economies, France and Germany?
Positive across the board. France's CAC 40 rose 0.50%, and Germany's DAX gained 0.20%. Even the Swiss SMI was up 0.56%. The only slight laggard was Italy's FTSE MIB, which slipped a fraction, just 0.04%. But look at Portugal. The PSI increased 0.53% to its highest level since January 2010.
What is driving that optimism in Europe? Is it just drafting behind the U.S.?
It's largely data-driven. We had EU harmonized inflation slowing unexpectedly to 0.7% in December. German CPI eased to 2.0%, and France cooled to 0.7%. When inflation falls that fast, it takes pressure off the central banks and boosts equity valuations. Even though some of the PMI survey data softened a bit, like the UK Services PMI revising down to 51.4, it's still in expansion territory.
So Goldilocks data in Europe, cooling inflation, but still growing. Before we dive into the technicals and the individual stock movers, we are going to take a very short break. Don't go anywhere. We have got a massive surge in silver to discuss and some big moves in the Forex markets coming up. Welcome back to Market Brief After Hours. We've covered the record-breaking equity markets, but we have to talk about the precious metals complex. If you were holding silver today, you are probably feeling pretty good.
Pretty good is an understatement. Silver absolutely exploded higher.
It settled at $81.24. That is a gain of 6.16% in a single session. It surged as high as $81.43. To put that in perspective technically, the price is now trading miles above its moving averages. The 50-day simple moving average is way down at $58.30. This is momentum acceleration in its purest form.
And gold?
Gold is also rallying, extending its run. It closed at $4,492, up 1.03%. It's holding well above its 50-day average of $4,192. The bulls are firmly in control here, likely using the geopolitical noise as a reason to buy hard assets, even if the oil market isn't reacting the same way.
Let's shift gears to the foreign exchange market. For our listeners who love the technicals, we saw some interesting interaction with key levels today. Let's start with the euro against the dollar.
The euro USD is showing signs of fatigue. It closed at 1.1688, down 0.29%. We are seeing a rejection near 1.1700. The pair is in consolidation, but it's holding above a critical zone. Specifically, it's holding above the 100-day simple moving average at 1.1664 and the 50-day at 1.1640.
So those are the lines in the sand?
Exactly. A sustained hold above 1.1664 keeps this pullback as just a correction. But if we get a daily close below 1.1640, that opens the door for a drop toward the 200-day average at 1.1554.
What about sterling? The pound has been on a strong run lately.
It has, but it paused today. GBP USD finished at 1.3500, down 0.31%. Buying traction just dried up a bit. However, the broader bullish structure is intact. It remains well above the 50-day SMA at 1.3280 and the 100-day at 1.3397. As long as it holds above the 1.3490 support area, the bulls shouldn't be too worried yet.
And looking at the Aussie dollar?
The Aussie is actually holding firm. AUD USD closed at 0.6739, up 0.38%. It closed near the session highs, which is a bullish signal. It's comfortably above the 50-day SMA at 0.6582. Resistance is right here at 0.6741. If it breaks that, the uptrend persists.
Let's touch on the yen quickly. We've seen some volatility there recently.
USD JPY is consolidating at elevated levels. It closed at 156.66, up 0.21%. It's trading well above the 50-day SMA, which is at 155.40. It seems stable near the upper end of its range. As long as it holds above 156.16, the consolidation looks constructive. A drop below 155.40, however, would signal a deeper correction.
And finally, the Swiss franc.
USD CHF rebounded a bit, closing at 0.7957, up 0.56%. But, and this is key, it remains capped below the key averages. It's still below the 50-day SMA at 0.7991 and the 100-day at 0.7986. Until it closes above 0.7991, the momentum hasn't really shifted.
All right, that's the technical landscape. Let's get to the fun part, the market movers. We had some massive single stock stories today. One name that jumped out was Aviva Technologies.
Huge move. Aviva closed up more than 34%. This is a classic headline-driven pop. They announced that their 4D LiDAR technology was selected for the NVIDIA Drive Hyperion autonomous vehicle platform. When you get a stamp of approval from NVIDIA in this market, investors pile in.
On the flip side, it wasn't a great day for fintech darling SoFi.
No, it was rough. SoFi tumbled almost 9%. Bank of America resumed coverage on the stock with an underperform rating and basically said there is more downside ahead. The market took that note to heart immediately.
We also saw a lot of action in the data storage space. What is happening there?
It was a sector-wide rally. SanDisk surged 27%, Western Digital gained about 17%, and Seagate Technology advanced 14%. This ties back to the AI and data center narrative. All that computing power needs storage, and investors are realizing these companies are critical infrastructure for the 2026 tech boom.
And I saw Shake Shack getting some love from analysts.
Yes, the burger chain rallied more than 7%. Deutsche Bank upgraded the stock to buy from hold. Sometimes it's just that simple. An upgrade in a bullish market can trigger a nice run.
One more name, OneStream. That sounded like M&A news.
It was. Shares surged 28%. Bloomberg reported that the buyout firm HG is in advanced talks to acquire them. Takeover speculation is always a potent driver, and in a risk-on market like this, M&A rumors tend to get fully priced in very quickly.
It really does feel like the market has opened 2026 with firm conviction. We have steady treasury yields, the 10-year sitting around 4.167%, and a market that is looking past the noise and focusing on the future.
That's the key takeaway. The session reflected a market that is comfortable taking risks. It's becoming increasingly selective, balancing these powerful trends in AI and semiconductors against consolidating areas like FX. But overall, the path of least resistance right now appears to be higher.
We will be here to track it all as it unfolds. That wraps up our coverage for today. If you find this useful, please follow Market Brief After Hours. We'll catch you next time.